I think in middle of June or early July of this year, they were finally allowed to increase their balance sheet. There's a very famous macro analyst, Zoltan Pazar, who estimates that they have about $450 to $500 billion of capacity in the balance sheet to buy treasuries and other debt securities now that they can grow their asset base. And so you have another liquidity engine in the commercial banking system in the United States. So I don't really care a fuck about the real economy. All I care about is the credit, and the credit's going to flow, and it's going to flow into Bitcoin. This is what a bank should be doing. I'm going to take your money and I'm going to pay you an interest rate on it. Then you can take this piece of perfected collateral and you can take it around the default Lego system and re-leverage it. You can trade with it. You can earn more yield with it if you want. But me as a bank, I just do something very simple. I just take your money and I let you send it from A to B very, very safely. That's what banks should do. They should be doing also the bullshit that we allow these banks to do in TradFi. And I can't wait for them all to be zeros.
Hey guys, welcome to Everyday Finance. The world economy is speeding toward a catastrophe rather than slipping into one. Despite their seeming caution, central banks are ready to release more liquidity due to rising debt. Geopolitical unpredictability and technological advancements surpassing antiquated processes. The pattern is evident, ranging from China's cautious stimulus and Japan's growing debt to Washington's defense expenditure. Governments to print when pressure increases. According to Arthur Hayes, this is not a typical market cycle, but rather the beginning of a historic monetary revolution. According to him, the world is underestimating the amount of fiat money that will soon overwhelm the system. Changing labor, value, and money. Owning tangible goods such as Bitcoin is essential for survival in this setting. According to Hayes, fundamental change, rather than technical charts or hoopla, will drive Bitcoin's next big climb. Bitcoin is the only asset that is well positioned to prosper as governments react to crises with limitless liquidity. As we delve further into Arthur Hayes' observations, stay tuned. Remember to subscribe, like, and enable notifications for deeper conversations.
I think we're starting to get to the real meat of the cycle, middle of the cycle, because if you think about, Trump's a new president. Obviously, it's a second term after the Biden administration, and his first term, he's a very populist president. He did the biggest sort of handout to American people since Andrew Jackson with or probably LBJ with sort of the COVID stimulus checks, right? That's not a very, traditional Republican sort of measure to basically say, let's just hand out money to people, make sure that they stop bitching while we lock them in their house for the flu. And so when that happened, he is, had bona fide credentials as a person he wants to win elections. He doesn't have ideology behind it. So winning elections means providing free shit to people. He provided the free shit during COVID. He provided the free shit in 2017 with one of the largest tax cuts ever in American history. And he's going to provide more free shit. Otherwise, him and his, Trumpian Republicans are going to get voted out of office in 2026 and then in 2028 in the presidential election. So I think he knows exactly what he needs to do, which is provide free shit and print money. And that's what he's going to do. And now, obviously, the Fed and certain individuals within sort of the bureaucracy that is the American government have been sort of stymieing his efforts. But, domino after domino is being knocked down. And, by, middle of next year, it's going to be full steam ahead in terms of the Fed's on board, no more Powell. Maybe he's got 4 out of 7 Fed governors and he can do some other funky things with the interest on reserves or the discount window. And you have Bessent doing these sovereign wealth fund deals. You have possibly Fannie and Freddie ending conservatorship, and now they can lever their balance sheets and add about $4 to $5 trillion into the mortgage markets, allowing people to re-leverage on their houses. So yes, if the consumer runs out of cash, what does the American consumer do when they don't have money? They borrow it. And so if I reduce the cost of money, then you can borrow more. And so I think that's why the price of money in this instance matters. I'm more of a quantity of money guy, but I can see that, you can say the American consumer is tapped out, the housing market's, a bit overbought. Well, if I cut rates from 4.5 to 2, well, then you're going to take more leverage and buy more stocks and, max out that credit card and buy a new car and take out a home equity loan. So I think that's a very short-sighted sort of explanation if you sort of believe that the Fed's going to start cutting rates and Trump was going to unlock all this liquidity on Fed balance sheets, the mortgage market. And, another thing that people are not really paying attention to is Wells Fargo has just been paroled out of jail. They were not allowed to increase their balance sheet for many years after the whole fiasco that the criminal sort of customer shit that they did back. I don't remember exactly what it was, but I think in middle of June or early July of this year, they were finally allowed to increase their balance sheet. There's a very famous macro analyst, Zoltan Pazar, who estimates that they have about $450 to $500 billion of capacity on the balance sheet to buy treasuries and other debt securities now that they can grow their asset base. And so you have another liquidity engine in the commercial banking system in the United States. So I don't really care a fuck about the real economy. All I care about is the credit, and the credit's going to flow, and it's going to flow into Bitcoin. I think the commercial banking system will become irrelevant unless one or two of them adopt stable coins, right? And this is why the whole fight about paying interest on them is a big thing. Because if I can easily pay interest as an issuer, why would I want a JP Morgan account? JP Morgan, I don't know what it pays, like 1.5%, 2% or something like that. I don't know. I don't have enough accounts, but I think that's around about the rate that you get as a depositor, JP or Citi or Wells Fargo, one of these large, too big to fail banks. But Fed funds is 4.25 to 4.5%, right? Money market fund yields much higher than that. And so the banks either have to raise their rates to match where the stablecoin is, because now I can literally, with a click of two buttons, move my money. It's all digital money. You have a digital bank run into stablecoins, or I have to raise my rates and reduce my profitability. Now, the best thing about a stablecoin issuer is that they don't have hundreds of thousands of useless employees doing all manner of bullshit, right? Yeah. Compliance is automated. KYC is automated. There is none of this legacy technology from the early 1990s percolating throughout your tech stack, which is a large bank. You don't have a bunch of fucking useless managing directors making $1 to $10 million a year scattered around your organization doing fuck all, right? So Tether is the most profitable bank in human history, making something, I don't know what the per employee numbers. I had an essay about it, but it's in the hundreds of millions, I think, per employee. They have something like 100 employees. So, this is what a bank should be doing. I'm going to take your money and I'm going to pay you an interest rate on it. Then you can take this piece of perfected collateral and you can take it around the default Lego system and re-leverage it. You can trade with it. You can earn more yield with it if you want. But me as a bank, I just do something very simple. I just take your money and I let you send it from A to B very, very safely. That's what banks should do. They should be doing also the bullshit that we allow these banks to do in TradFi. And I can't wait for them all to be zeros.
Stablecoins are subtly changing the framework of international finance as Bitcoin soars on increased liquidity. A new, faster, leaner, and profit-driven monetary network is emerging as governments get ready to create more money and consumers take on more debt. Already, stablecoins are beating conventional banks in terms of speed, yield, and demand. Legacy banks will lose their mission, in addition to their clientele, if they are unable to change. The digitized, seamless, and unstoppable financial future is upon us. The actual question is how Bitcoin has already outperformed gold, stocks, and bonds after accounting for monetary depreciation, rather than why it isn't higher. The true difference lies in speed, not ideology. Bonds are traded on traditional markets, while cryptocurrency is driven by momentum and velocity. Public cryptocurrency stocks are becoming the new bridge as investors look for exposure, without the custodial risks associated with tokens. Scale is king in this new era. Speed is paramount, and money printers aren't going anywhere anytime soon. Let's explore some more of Arthur Hayes' impactful interviews highlights.
So I wrote an essay called Buffalo Bill, and I gave a presentation in WebEx in Tokyo on the same topic. And basically, my thesis is that Besson has a problem: de-dollarization. The U.S. government defaulted on its debt essentially in 2008 when it decided to bail out the banking system rather than let the credit contract and root out all the bad debt in the system. And as foreign holders of debt, that were like, well, what the fuck? Why am I holding this debt when the U.S. is not going to safeguard the currency? I'm going to buy gold. And so you can see the percentage of ownership in central bank reserves of gold is on a secular rise starting in basically 2009. Mm-hmm. And ultimately, all these countries around the world who produce the things that the Western world wants, right? The global South, the BRICS countries are the ones that have the resources, that have the labor, and they basically make things and sell it back to, America and Western Europe for cheap prices. That era is over. They want to say, why am I working this hard to accumulate this asset that you're depreciating at, I think, about an 8% CAGR every year? I'm going to buy gold. And so Beston's like, well, who's going to buy all this debt that I need to issue? The federal deficit's actually not decreasing under the Trump administration. It's growing, just as I thought it would. This Doge thing was a farce. And, Trump, again, they need to provide the goodies to the people. So the deficit is only going to get larger. So who can buy this debt that Beston has to issue? Nobody wants to buy it at the long end because, there's duration risk, there's interest rate risk. They're increasing the supply a lot. So, he can't issue, 5, 10, 30-year bonds in the size that he would like. So he has to issue in the T-bill market. Now, the reverse repo facility was at $2.5 trillion. His predecessor, Janet Yellen, or somebody on her staff, decided that they were going to increase the amount of treasury bills issued to draw that money into the system. That was a $2.5 trillion stimulus starting in September of 2022. And that's when crypto, gold, everything, stocks took off as Yellen essentially juiced the markets in the face of Powell conducting quantitative tightening and raising rates. But that's done. Who else can buy all these T-bills, these trillions of dollars of T-bills that Beston needs to issue every year? Well, the first thing is the Eurodollar market. There is all these dollars sitting offshore that the federal government cannot monitor, that are outside of their control. And, they're doing things that the U.S. government might not want them to do. Maybe they're financing projects that China wants them to finance and not projects that Trump wants them to finance. Why aren't they buying U.S. Treasury bills? Well, the theory that I had and supposition was that Beston could basically remove the implicit guarantee on Eurodollar deposits, because every time the banking system fucks up, especially outside of America, the Fed and the Treasury rush to the rescue, open their swap lines, and make sure that the Europeans and everyone else who has all these offshore dollars in banks has liquidity so they can be current on all the debt. So to remove that, and so if I'm a Eurodollar depositor in a foreign bank, well, what do I do now? I can go get a stable coin, because a stable coin is essentially backed by the U.S. government. Because what do Tether and Circle and others who are dollar peg stable coins have? They either have a bank deposit in a chartered U.S. bank. If you're too big to fail, like JP Morgan, Citibank, and those guys, they have an implicit government guarantee. If you're not too big to fail, after the 2023 regional banking crisis, we now know that every single deposit in the U.S. banking system is de facto guaranteed by the government. So I know that if I have a dollar in a U.S. bank, I will never not have a dollar in a U.S. bank. They will always bail out the banks. And if I have a treasury bill, that's a liability of the U.S. government. What does the U.S. government have? They have a U.S. dollar printing press, which they can print infinite amounts of dollars for essentially no cost. And so if I have a stable coin that has either a bank deposit or treasury bills, mandated essentially by law, will be mandated by law with the Genius Act or some other piece of legislation, then my money is guaranteed by the U.S. government. Versus I hold this euro dollar, which they're removing that guarantee. And you're seeing strategists across Europe wondering, well, if Trump doesn't like what we're doing geopolitically, could he remove the dollar swap line with the ECB or with whatever foreign central bank? And Trump has threatened these sorts of things before. So it's definitely something to be wary of. And then the second thing is we have all these people around the world who want dollars, which is why Tether is so popular. Tether's not really popular in the United States because in the United States, you have a dollar. And if you're American, you have a bank account, you can send dollars around pretty easily, pretty cheaply. But if you're in LATAM or developing Asia, you have a highly inflationary currency. You have deposit rates below nominal GDP. So you're getting fucked by your banking system, by the politicians inflating away your money. What do you want? You want a dollar if you're talking about fiat. But the regulators don't want you to have a dollar. They want to inflate away your money in their local currency. So they prevent the large foreign banks from coming in and offering banking services in dollars. So what can they do? Well, everyone has a Facebook account. Everyone has a Twitter account or X account. And so these Western technology giants can now be greenlit to offer banking services through their super apps. And so you're going to see WhatsApp offering payments. You're going to see X offering payments. And if the local regulators bitch and moan that all of a sudden they're losing control of their locals' money because Zuckerberg and Musk and Bezos have control of this money through their apps, well, then Trump's just going to sanction them. Oh, you don't want to let the U.S. tech giants operate in a free manner? We let your companies operate in America? Well, 100% tariffs on you. Oh, guess what? All of you Asian elite politicians, you all steal from your population and stuff your money at JP Morgan high net worth accounts. Well, I'm going to sanction you too. And so you no longer have access to all your dollars unless you let our large tech giants operate in your country without any restrictions. And so all of a sudden, now you unlock trillions of dollars in the global south from people who want a US dollar bank account, but their local regulators don't want them to have it. So now Bessig can stuff these people with a treasury bill at whatever yield he wants. 1%, 2%, 3%, whatever it is, it doesn't matter. It's better than having a Philippine pesos and Argentinian peso, right? Those are the types of things that have massive inflation. So that is where I get the sort of $34 trillion TAM of like possible money that could flow into stable coins. And I think it makes geopolitical sense for Bessig and Trump to pursue this. You're seeing them beat the drum about why stable coins are very good. There was a report written to the Treasury Department, I forget how many months ago, and they estimated that $2 trillion would flow into stable coins and an outline for the Treasury how it worked. So obviously they believe that this is something that is good for America's monetary policy, and then they're going to let the private sector go out and spread the stable coin sort of thing around the world, and they're going to buy treasury bills, and that's the end goal. They don't care about innovation or any of that stuff. It's an end way to get treasury bills bought from a price insensitive buyer. So that's sort of my whole thesis on stable coins, and obviously that flows down into now DeFi, right? Because now once I have a stable coin, I have, the building block of a DeFi Lego. I can take this stable coin, I can lend it, I can leverage it, I can trade it and do all these different things. And now I'm familiar with a digital wallet. And so using a MetaMask or a Phantom or whatever across the global DeFi ecosystem becomes very, very easy. And that's what pumps up certain projects that I mentioned in the essay: Athena, EtherFi, Hyperliquid, and Codex. But so that's sort of my macro on stable coins, which feeds into sort of like positions on DeFi protocols.
Bitcoin's quick decline below $114,500 represents a reset rather than a breakdown. The larger trend is still accelerating beneath the surface. Long-term holdings have not flinched, despite traders' anxiety and short-term sellers' impatience. This is only a lull before the next market upswing, not the conclusion of the bull market. Arthur Hayes repeatedly emphasizes that rate reductions in ETF headlines are not the true reason. The tidal flood of money that governments will release to prevent the system from collapsing is liquidity. They print when they're under stress. Each and every time. There will inevitably be more fiat and less hard assets as a result of mortgage strain, national debt, and geopolitical changes. According to Hayes, this stage is the pressure that accumulates before abrupt movements and is characterized by compression rather than surrender. Stablecoin growth, sovereign interest, and institutional inflows are all still very much in vogue. There was hardly any indication of weariness, as nearly $2 billion recently poured into cryptocurrency investment products. When expectations shift, markets might stall. But if liquidity returns, Bitcoin won't simply bounce back. It will align with the macro wave that is currently developing. Before the next breakthrough, this tranquil period might be the final big entry. If the Fed fires up the printers once more, where do you think Bitcoin will go next? For other insights, leave a comment, hit like, and subscribe.